Don't pay taxes now, pay taxes later. I'm going to say that again for emphasis. Don't pay taxes now, pay taxes later. If you take in that concept during the working years, during retired years, and even for concepts of estate planning, you and your family will be hundreds of thousands, perhaps millions of dollars better off. And that's going to be our theme. And of course, there's always an exception, which is Roth IRAs and Roth IRA conversions. I want to start, though, with the concept of don't pay taxes now, pay taxes later, while you are still working. And I actually had an interesting experience, and this is almost 25 years ago, where a woman, I was actually preparing her tax return at the time, and she said, you know, Jim, I have a choice. I can put money into my retirement plan at work. This is over and above what the employer was willing to match. Or I can invest the money outside my retirement plan at work, and I'm not sure which one I should do. And I strongly encouraged her to utilize the retirement plan at work. And then as I was preparing for my book later on, I thought, you know, what kind of an impact did I have? And I went back and I figured, okay, what would have happened had she invested money outside of her retirement plan? Now think about that. She was going to earn money at work and pay the tax on that. She was going to take the money after she paid the tax, and she was going to invest that money. Then she was going to pay the tax on the income, on the dividends and the capital gains. All right, as opposed to the advice that I told her, put the money in the retirement plan. And that way you're not paying the tax. Or looked at another way, you're getting a deduction for the contribution to the retirement plan. The money that is invested in your retirement plan will not be taxed until you withdraw it. Now, it is true that when you withdraw it, you will have to pay taxes. So a lot of people say, Jim, you shouldn't have named the subtitle of your book, Pay Taxes Later. It should be Pay Taxes Never. Well, that's too good. Pay taxes later, though, will have a huge impact on her life because she was able to invest all that money that she would have otherwise had to have paid in taxes. And over a period of time, what we can see if we actually quantify this, if she had even just put $5,000 a year into her retirement plan versus putting the same amount of money outside of her retirement plan, at retirement, she would literally have, let's say, another $700,000-800,000. So think about that. Two people, they earn the exact same amount of money. They spend the exact same amount of money. Their investments are identical. And at retirement, there's a difference of $700,000. And if she continues that theme of don't pay taxes now, pay taxes later, the difference over her lifetime will be practically $2 million. It's the power of don't pay taxes now, pay taxes later.